Welcome to the May edition of This Month in Payroll. I'm Claire Soccio, a partner in PwC's Payroll Advisory and Operations practice. This month we will focus on the Fair Work Ombudsman's guidance about payroll remediations, key actions to prepare for end of financial year, and an update to the Fair Work Commission's Gender Undervaluation Review. The Fair Work Ombudsman released guidance in April to help employers establish transparent, employee-focused payroll review and remediation programs. This guidance clarifies the regulator's expectations, which is important context as the Ombudsman will consider the steps taken by employers when deciding whether to take compliance or enforcement action. Effective governance is essential. Programs should have oversight at the board or senior executive level, with clearly stated principles, governance processes, and comprehensive documentation. Oversight should allow for monitoring progress, making adjustments as needed, and maintaining thorough records of methodologies, decisions, approvals, and risks. Employers are expected to engage early and broadly with employees, unions, other workplace representatives, third-party advisors, and payroll technology providers where appropriate. This wide consultation aims to improve remediation accuracy and build trust with employees by ensuring their concerns are heard and addressed. Large-scale remediation programs require dedicated resources, including project management, data analysis, workplace relations expertise, and communications support. Relying solely on internal payroll or HR teams, who are also responsible for business-as-usual activities, can delay outcomes and reduce review quality. Now to the detail of the program structure and starting with scoping of the issues. The first step is a thorough discovery and diagnosis phase to identify compliance risks, root causes, and the scale of any historical review. Employers should use a wide range of information sources, such as source records, payroll outputs, data analytics, industry benchmarking, and employee feedback, to ensure all relevant risks are captured. If issues are limited to a specific group or entitlement, a targeted review may suffice. However, if problems are systemic or relate to failed records or systems, a broader review is needed. All scoping decisions, including exclusions and the rationale for any phased approach, should be documented. The review period should generally extend back at least 6 years, in line with statutory limitations, but longer periods are encouraged if records allow. Now to methodology. The Ombudsman describes calculation methodology as the engine room of any remediation program. Where data gaps exist, employers should use evidence-based, employee beneficial assumptions, drawing on alternative sources like security logs, IT systems, or direct employee consultation. Regarding offsetting, the Ombudsman has confirmed its current position, being that an employer cannot use an excess from one pay period or entitlement to offset a shortfall in another. If a different offsetting position is taken, the Ombudsman is likely to seek information about the legal basis for doing so. The issue of offsetting in the context of a wage remediation is currently awaiting judgment in federal court proceedings, which in time will provide welcome judicial clarity. Clear and effective communication is critical. Employers should notify all potentially affected employees as early as possible, providing clear information about the process, expected timeframes, and what it means for them. Communications should be tailored to different employee groups, transparent about issues and methodology, and provide simple avenues for queries and dispute resolution. Employees should not be required to keep remediation payments confidential or sign release agreements as a condition of payment. The focus should be on openness and accountability, ensuring employees have the information and support needed to understand and, if necessary, challenge their remediation outcomes. When making remediation payments, employers are expected to include interest, reflecting the loss to employees from not having received their entitlements on time. The Ombudsman generally accepts the federal court's pre-judgment interest rate as a benchmark. Employees should receive detailed breakdowns of their payments, including superannuation and tax implications, and be given the opportunity to seek a review if they believe their outcome is not correct. For former employees, all reasonable steps should be taken to locate and pay outstanding amounts using multiple channels and repeated attempts where necessary. Remediation programs should not only address past errors, but also strengthen culture, systems, and capability to prevent future non-compliance. Employers should act quickly to address the root cause of underpayments, understanding that interim measures may be needed while longer-term solutions are designed and implemented. To achieve ongoing compliance, employers need to invest in systems and technology that support accurate payroll processes, strengthen governance and culture, and embed ongoing assurance and audit processes. The Ombudsman has provided extensive guidance on measures employers can implement, which serves as a valuable resource for payroll functions as they assess their current state and define priorities for the future. Employers currently undertaking remediation should also consider whether any aspect of their program differs from the Ombudsman's expectations and make adjustments as appropriate. Now to preparing for end of financial year. With the end of financial year fast approaching, it's important to carefully prepare for the final pay run and subsequent lodgements. Today we're going to run through a few key activities that will support accuracy and timeliness in your year-end submissions. Prioritise the accuracy of your employee master data. When each single touch payroll event report is lodged, certain employee information is transmitted to the ATO, including names, tax file numbers, addresses, and employment status. It's important that this information is accurate. If you have an HRIS system with direct payroll integration, proactive communication with employees might be needed to secure timely data updates. Verify your payroll system's configuration for reportable employer superannuation contributions, or RESC. These are contributions where an employee can influence the rate or amount and include salary sacrifice contributions. Careful assessment and categorisation of above minimum super contributions is crucial for RESC compliance. Coordinate the inclusion of reportable fringe benefits. You must report fringe benefits where the total taxable value for an employee is more than $2,000. Most fringe benefits are reportable with only a few exemptions. Given potential FBT return extensions to 30 June, early cooperation and planning between payroll and FBT teams is vital to ensure adequate time is available for data integration and review before STP finalisation. Review any back payments qualifying as lump sum e-payments, ensuring thorough documentation and required reporting of the prior year periods to which the payments relate. If you have employees who've worked outside of Australia, you might be required to report relevant income as foreign employment income. Consider factors such as duration of foreign deployment and tax treaty implications, ensuring accurate reporting of foreign income and taxes paid to support employee tax offset claims. Conversely, if you have foreign employees who worked in Australia, use the ATO reporting concession appropriately. You may need to report these earnings as inbound assignee income through shadow payroll arrangements, which are typically processed 1 month in arrears. And finally, you should plan now and address payroll tax lodgements. This includes identifying any contractors and documenting any applicable exemptions, ensuring that you have reviewed the ledger accounts to capture all relevant payments. Calculate employee share scheme payment values accurately, noting potential variations between the taxable value for payroll tax purposes and the amount included on the employee share scheme statement. You should also verify any parental leave and employment termination payments. While year-end demands can be substantial, strategic planning and appropriate resourcing significantly reduce pressure. Success hinges on identifying data held outside of payroll and establishing clear processes, responsibilities and timelines for the receipt and ingestion of that data into the payroll system. Also use this period to enhance process documentation, creating a stronger foundation for future years. We wish you well in what is inevitably a challenging time of year. And lastly, in April, the Fair Work Commission issued its initial decision for the priority awards under its gender-based undervaluation review. As a reminder, this review was initiated under the Secure Jobs Better Pay reforms, which embedded gender equality as a core objective in wage setting and award variation processes. This stage of the Commission's review has focused on 5 priority awards covering highly feminised sectors. The Commission found that minimum wage rates for certain professions covered by these awards have not been set on a proper, gender-neutral assessment of work value, resulting in systemic undervaluation of work predominantly performed by women. The decision mandates significant structural reforms and phased wage increases to rectify this undervaluation. Some examples of the key findings and award variations include: for the Pharmacy Industry Award, an increase of 14.1% to pharmacists' minimum wages, phased over 3 years, starting 30th of June 2025. For the Social, Community, Home Care and Disability Services Award, or SHADS, the proposed consolidation of the current 5 separate classification structures and revocation of the Equal Remuneration Order into a single simplified structure. And for the Health Professionals and Support Services and the Children's Services Award, a proposed simplified classification and wage structure, including reclassification of certain roles to higher award levels. While the variation to the Pharmacy Award has already been made, the other changes are provisional views only and are subject to further hearings and conferences. Impacted employers need to monitor these provisional views as the consultation process progresses and act promptly and proactively to consider the financial, operational and compliance implications. These might include modelling of the direct and indirect cost impacts and budgeting for phased increases, considering flow-on effects to workforce planning, and updating payroll systems, employment contracts and HR policies to accommodate the new classification structures and rates. The Commission's decision reinforces the regulatory and societal expectation that employers actively address gender-based pay inequities and progress towards fair and equitable remuneration practices. It sets new benchmarks for work value and pay equity, which may heighten scrutiny of gender pay equity during bargaining processes. The General Retail Award and Aircraft Cabin Crew Award are tipped to be among the next areas of focus for the Commission's review. All employers should regularly review their gender pay gap data, ensure transparent remuneration practices, and be ready to demonstrate progress against gender pay equity priorities. And that's it for our May edition of This Month in Payroll. If you would like to revisit any of our prior updates, they're available on our website at pwc.com.au/payroll. And if you have any questions or need for support, please reach out to myself or your usual PwC contact. Until next time, have a great month in payroll.